Market Journal's partners for this year's roadshow were UNL's Department of Agricultural Economics and the Nebraska Department of Agriculture. The major focus for the events was on how producers could better navigate the current farm economy. The expectations for this year were highlighted Wednesday when the USDA lowered its U.S. net farm income forecast to $66.9 billion. That would be a 17% drop from 2015. Nebraska Department of Ag Director Greg Ibach regularly talks with us on Market Journal about the international efforts of the NDA, but he joined us at the roadshow this week to describe the results of a survey focused on farm finances in Nebraska. We talked with him in Kearney about the purpose of that study.
Earlier this year, we knew even in the spring that farmers and ranchers were looking at lower commodity prices going into the fall. We knew that a lot of farmers and ranchers had purchased real estate, purchased farm equipment, and had bid up cash rents in their neighborhoods as part of the strong farm prices. And so, based on my experience in production agriculture, I knew that that kind of was the formula or the ingredients for financial stress. And so we and the Department of Agricultural Economics worked together to do a survey to kind of gauge just how deep or how concerned individual producers were this summer.
What did the results show based on the questions about how much stress they were under?
So what the results of the survey showed was that in the young and beginning farmer categories, which we've had a pretty strong return to the farm during the good farm financial period, that those producers were a little bit more concerned about what the downturn in prices meant. Many of them were the people that had to rent the land, that was competition, increased those rental rates. Many of those maybe purchased real estate or equipment to enhance their family operation, to allow them to expand and come home as well. And so they were probably the most concerned in the survey. Some of our more experienced or longer term established farmers and ranchers, not as concerned. They were confident that they would be able to weather the storm.
What are the things that they were thinking about doing in the future to try to better position themselves financially?
So I think that's part of the result of coming out now with the roadshow having a strong element of managing for the future, as well as working with Extension and the Department of Ag Economics to look at what we offer from a department point of view with farmers that may be experiencing some financial stress, as well as what they can do to help farmers manage that. But look at things like inputs, family living expenses, and how do you work with your banker to structure your debt to fit your income. A lot of when we had high farm income, a lot of machinery and equipment that might have been put as an intermediate term debt was rolled into the current debt. Maybe if we reconfigure the way the debt's structured, that will help us better operate into the future.
What programs does NDA have that you think farmers and ranchers should be aware of, or young farmers and ranchers should be aware of?
Well, we definitely have, if they're experiencing financial stress, we have the mediation program, which many bankers embrace the opportunity to sit down together and work proactively with a third party to help find solutions. But in some of our young beginning farmer tax credit programs, if they were participants in that, a component of that had to do with financial management, and so hopefully that helps some of those farmers. I think ours are more, the programs that the department has are more extreme, for those extreme cases that maybe have gone farther. We're hoping by partnering with the university to take what we have available and enhance it with what they can do through extension to help manage it ahead of it becoming a big problem.
You can find more information about the study Greg mentioned through a link on the Market Journal website.